Hi guys, in this video we will be discussing about the accounting concepts and accounting principles. This topic is important for most of the commerce courses like BCom, MCom or even SET and NET. Moving on, accounting assumptions or concepts. Accounting concepts include certain basic assumptions, principles or conditions on which the accounting system is based. It is the framework in which the accounting system should be run so that to bring about a uniformity as well as a logical explanation for whatever system is followed. So the first accounting principle is accounting entity concept. The concept differentiates between business and proprietor, and his drawings with the business should be recorded as separate transaction. If the private affairs of the proprietor is mixed with the business, the true picture of the business will not be available. The personal drawings of the proprietor is recorded as drawings instead of recording it as a business expense. For example, if a proprietor withdraws rupees 1 lakh for his daughter's marriage or his personal use, any personal use to buy a house for himself or something, it is recorded as a drawing. Why this is done is if this 1 lakh is written as a business expenditure in the profit and loss account, the according to this concept, the proprietor and the business are considered as separate entities. That is, if the proprietor withdraws money for his personal use, it is recorded under the name drawings instead of recording it as a business expenditure. Again, when the proprietor introduces cash into the business, it is not considered as a business income. Instead, it is recorded as capital. By this way, you can give a true picture about the profit of the business or the true affairs of the business. That is, if a proprietor takes rupees 1 lakh for his personal use, like for construction of his own residential house or something, if you consider it as a business expenditure, then there is no benefit for the business by the withdrawal of the proprietor. He's just using it for his own personal residential house construction, which has nothing to do with the business itself. So therefore, it cannot be considered as a business expenditure. So ultimately, in short, it's this that the business and the proprietor should be considered as separate entities, not one and the same. Going concern concept. According to this concept, the business will last for a long time. There is no intention to liquidate immediately or the near future. This is why assets are recorded at the original cost and depreciation is charged in a particular manner. If the concept is not followed, the entire cost will be charged to the profit and loss account, but the asset can be used over a number of years. Thus, the rate of depreciation is shown on the profit and loss account and deducted from the asset side of the balance sheet. See, according to this concept, this business will not liquidate or come into a stop within a short while. Not in 1 year, not in 10 years, not even in 20 years. It will go on for a very long time. And this is why the assets are recorded at the original cost, and a part or a percentage of the assets are depreciated year by year. If it is like 10% this year, next year also this 10% will be deducted. Instead of recording, if an asset is purchased for 50,000, it is not like this 50,000 is recorded to the profit and loss account and that finishes off there. No, it's like 50,000. The depreciation is again 10%, which is 5,000. The 5,000 is recorded in the debit side of the profit and loss account, and on the asset side, the total 50,000 minus 5,000, that is 45,000, will be recorded in the balance sheet. And again, there is 45,000 rupees asset left over with the business. Reference Accountancy 1 by P.K. Lazar.